Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 24th of February, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go for our usual Monday run through where we take a look at the shape of the week. We'll look back at what were the big macroeconomic, geopolitical, central bank events that shaped financial markets last week and looking ahead to what's going to be important going into this week to give us an idea of the shape of the week, where the potential volatility points might run up. We might run up against as we go into the week, where it might be less volatile. Although obviously, given the current climate, given the Trump administration, those of you who traded through the previous Trump administration, and those of you who are now trading through the current Trump administration, probably understand now that volatility can come at any point with any kind of announcement. Obviously, at the moment, we've got tariffs very much front and center, and also geopolitical uncertainties around what's going on with Russia, Ukraine, and elsewhere, for that matter. We're going to run through our macro matters and macro summary in here. The macro matters, remember, you can access these. These are below where you're watching. If you're watching this live, in the middle column, we have the macro updates posted every weekend. You get the daily technical analysis, which we'll come to shortly. There on the left-hand column and the right-hand column, the news from our partners at LiveSquawk. So we'll focus in. The macro matters is the longer version in here, but we'll just take the headlines and here the bullet points, which are kind of expanded on really here in the macro summary. So take a look when you get a chance at some point. Last week we had a good beginning of the week, Monday through Wednesday. US stock averages in some instances hitting new record levels, all-time highs. But then we saw a plunge lower Thursday through Friday. So saw those stock indices significantly lower than for the week. The Dow Jones and the Nasdaq down 2.5%. The S&P dropped 1.7% in here. Growth stocks were the ones that got hit the most, and partly to do with in here. So there's a number of things in here. So ongoing tariff and geopolitical tensions are a concern to markets. We've seen that with gold hitting a new record level last week. We saw the Fed minutes in the middle of the week, with the Fed very much and the FOMC pointing to being very much on hold at the moment, and really pointing to the uncertainties around potential inflationary pressures coming through from tariffs. There is concern. Obviously those tariffs are on the table and potentially going to be put into place, and the concerns that will add inflationary pressures into the US, and the Fed very much on hold and wait and see to what happens there. The back end of the week, really, what kicked off the sell-off is we both had Walmart guidance from data on for the Walmart earnings. Even though Walmart earnings and EPS and revenues were better than expected, their guidance was fairly negative. So that was disappointing. That sort of kick-started the move lower. And then we had US consumer confidence data on Friday, which was worse than expected in here. If we scroll down, it was the where are we near? US consumer confidence, University of Michigan index in here, plunging nearly 10% from January. So it's the lowest level since November 2023. So a very negative number there. And that sort of then triggered a liquidation effect, with ongoing, obviously, geopolitical concerns ongoing with respect to Ukraine, Russia, with respect to tariffs, adding to the sell-off, and then we just saw a liquidation effect and stops being run and significant sell-off on Friday. So markets, certainly a little bit nerdy in here. So it took what was actually usually what's seen as a fairly small piece of data in here, and even though it was actually quite negative. But the University of Michigan Consumer Center isn't usually a big market driver, but it was kind of a trigger. After Walmart, so you have Walmart, obviously that's the consumer, University of Michigan numbers in here. So both consumer numbers in here, concerning markets, and then that added onto the backdrop of tariffs and the geopolitical concerns around Ukraine, Russia, maybe Gaza as well. Then seeing liquidation pressures, and that just triggers stops. And so we saw a cascade effect, domino effect, where we saw a big sell-off on Friday. Switching our focus this week, Wednesday we get NVIDIA results, which is the last of the Magnificent Seven, dubbed by Goldman Sachs the most important stock in the world right now. So we're certainly going to be watching for that. And in particular, obviously, these are the first set of results in here from NVIDIA since the DeepSeek shock that we saw that was raised concerns on the whole sector, the US side of this sector in here. So the numbers are expected very, very, very strong in here. So it could be very volatile. So in here to say, look, options markets suggest an implied move of plus on 9% 8% in here. So, it's going to be interesting to see how that pans out and how it affects potentially the broader indices. So watching out for Nvidia. That's after the bell. If you just scroll in here to the earnings numbers in here, there's Nvidia comes after the bell. So after the close on Wednesday, we'll definitely be keeping an eye on Nvidia. On top of that, though, if we go back, we have the other significant piece of data is the PCE data. Now, given that the Fed are telling us they're on hold, they're on wait and see mode because they're concerned about inflation from potential tariffs. Okay, that's not started to happen yet. We're not going to see that start coming through until the tariffs are put on and we get some idea. But I mean, we will be watching the PCE data we get on Friday. So PCE data comes out Thursday and Friday, but the one that's more important, the month-on-month and year-on-year data come out on Friday. So we're watching those. So I've actually scrolled down to what we've got coming up. German IFO, EU CPI, already out in here this morning. I think if I go to the I haven't popped out the calendar. Let me just quickly pop out the calendar in here. Oops, wrong one in here. Let me just switch this. Oh no, here we are. Hopefully you won't hear me. So we've already had the EU CPI in here coming in. Look, you see bang in line with expectations, the EU CPI. Mix on the German IFO data in here. Slight misses, slight beats in here. So no real signals. More importantly from Germany, we'll talk about it in a second in here, is we had the elections over the weekend. So the real main focus then going into the week, as I said, in here, we're going to be focused on Nvidia on Wednesday. US consumer confidence actually data on Tuesday as well. That's going to be important now, given the data that we had on Friday, the Michigan data in here. So keeping an eye on that as well going into tomorrow. And then we get the GDP, US GDP, PCE. US GDP and durable goods data in here on Thursday, and the quarter-on-quarter PCE. But more importantly, then on Friday, as I say, that month-on-month, year-on-year PCE data out of the US. So we'll be watching for that in here. If you look at the European briefing this morning from our partners at LiveSchool, in that right-hand column, some focus here really on German elections. Winners pledge independence from the US. There's been a strong, some strong rhetoric in here already from the Conservative Party in here in Germany, saying that Europe has to rebuild and take care of its own defence in here. So an independence from the US. So that will be interesting to see how that plays out. The previous incumbents in Germany were very much not of that thought process. So maybe coming in more in line with the UK and France are talking about. So there may be some way forward there. Both the French and the French President Macron and UK Prime Minister Starmer are both visiting the US and visiting Trump this week, so we might get some extra volatility there. Zelensky looking for a meeting with Trump as well. So there's potentially a lot on that front, between European leaders visiting the US. Zelensky wanted to speak to Trump, and any ongoing tweets or from Trump or from the administration regarding Ukraine, Russia negotiations, and then also obviously anything on tariffs as well. So potentially lots of potential volatility points coming up with the geopolitics as we go into this week. I didn't have the mornings America. Oh, maybe it's in here now. Oh, here it is. So I haven't looked at this. This is my first look in here. So Apple will spend billions and thousands of jobs in the US. That's a positive. Obviously, Apple plans a multi-billion-dollar investment in the US. So that's a definite positive. Trump takes aim at China in memo on investment trade. Federals got caught between England's DOGE and their jobs. So nothing really massive there. Ukraine President also said he would step down. This came at the weekend as well. He would step down if he were to guarantee peace and membership of NATO. That's unlikely, though, the membership of NATO anyway. Europe's trying to get hard to get involved in talks. Macron and Prime Minister Starmer meet with Donald Trump this week. So that's going to be interesting to see how that goes as well. So German Conservatives won the election, gained by the far right as well in here, which are a little bit of a concern in some ways, and maybe going to have to do a coalition with those parties. So yes, not massive in there. Nothing we don't know already in here. Obviously, there's a positive from Apple, but really what we're seeing in here is ongoing concerns around geopolitical risk and geopolitical tensions. And the German Conservatives face narrow path to power after victory victory, so they're going to have to form a coalition, and that's going to see how that's going to work in here. So it's going to be interesting to see how that plays out going forward as well. So yeah, a lot of moving parts. German Conservatives win election, seat coalition. So a lot of moving parts geopolitically, and that obviously always add potential for higher volatility, geopolitical risk in the financial markets. The euro, though, and German stocks were reacted positively to the Conservative win in here, covered here, and US futures bouncing this morning after Friday's sub, so a slight bounce, but there's kind of quite a lot of negative. The negative price action here really for us caused us to move more negative on our technical analysis reports. We'll come to those shortly. On the overnights, not much happening in Asia. Up 0.25% on the Japanese Nikkei, down about 0.6, just less than 0.6 on the Hang Seng. European markets, little change outside of Germany. So the FTSE's up slightly, the French CAC, UK FTSE up slightly, the French CAC's down slightly, but the DAX up 0.9 in here overnight. So the German market responding well to the political win, the win by the Conservatives, and futures, as we say, have bounced in here after a big sell-off on Friday. We are up 0.3 on the Nasdaq and just under 0.5% on the S&P 500 going into this morning. But the outlook still looks fairly negative given the significance of the sell-off that we saw Friday. I'm going to go through the bond markets very quickly, but and the interest rate markets. There's still no real chance of a rate cut in March, as we said previously. It's kind of fairly evenly split between whether we get more likely that we've got a rate cut by July, but maybe June, July, we get a rate cut, but the market really only pricing in 50% of only one rate cut in here going into the end of the year. Yields are actually moving lower. So on that big sell-off that we saw on Friday, the big sell-off in the stock indices, bonds went higher in price, so yields went lower in here on at the end of last week. So and back down to recent lows. So there is risk in here. We could break to recent lows. Lower yields obviously are potentially going to be positive for stocks. So keeping an eye on 10-year yield maybe below 4.4% in here would be a positive. And so for the bond markets, we stay bullish in here right the way across the board. Whether we're looking at the 30-year, we can see breaking up towards recent high prices, which are low yields in here. So all of this in here potentially going to be panning out as positive for stocks. But the big sell-off that we did see on Friday in here, we did switch bearish in here. Looks like potential for a topping pattern on both the S&P and the Nasdaq. So we are bearish going into today. And if we take a look at the chart in here, despite the rebound, this big, strong Marubozu candlestick for both the Nasdaq. Remember, Marubozu is when it opens on one end and closes at the other end. So big, impulsive candlestick lower in here, kind of signaling a potential topping pattern. Yes, we have rebounded, but I think it's just not enough in here at the moment. If we get back above the overnight highs, I think really it's going to need to start to claim 50%. So what I would be doing in here is looking at the 50% from the sell-off from Friday. So if I can get rid of this in here, I'll be looking at the 50% retracement from just Friday's move. So we're looking at around the 60.83 level on the S&P and the similar level in here on the Nasdaq. Recouping there is going to be all the way up at 21,950. Now the 382 retracements on those, that's going to be your first indication that maybe a little bottom's going in. I think we need to get above 21,880 on the Nasdaq to open up upside initially, and then ultimately really through 950. And for the S&P, switching back and just giving you the 382 on that one there, that we failed just basically right at the 382. So the 382 is 60.69. So 60.69 and then 50%, 60.83. So those are the two levels on the upside. Until we clear those, it looks pretty negative going into today. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another Bull versus Bear webinar on Tuesday.